Welcome everyone to this afternoon's session where we're going to be looking at the futures, trading the futures using volume price analysis and some of our quantum trading tools. But before we start, as usual, may I draw your attention to the disclaimer that I know you can see on the screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I mentioned volume price analysis. It's a methodology David and I have been using for almost 20 years now. I know there are people who come along to these sessions. They've either read the book, some of them have invested in our tools, and some have also invested in our Forex education program. But the beauty about this methodology, as I have said many times before, and I will keep saying, is that you can apply it to any market in any time frame, and it's kind of almost irrelevant what the ticker is on the chart. You know, it allows you to analyze the chart looking at the price action and volume, and I suppose what it really tells you is what is likely to happen next. So that's the book. What we've also done with it, it was the request from a lot of hundreds of traders who had bought the book saying, could we have more examples of VPA? And there is a companion to the main book, and it's called Investing and Trading Using Volume Price Analysis, and it's about 200 worked examples, as I said, across all markets, primarily this one on indices and stocks and commodities. There is a Forex one, because the brilliant thing about VPA is that you have these patterns, and in terms of not just the candles but also the volume patterns, and they repeat. And to be honest, once you get to know them and you'll recognize them, you see them on the chart and think, now I've seen that one before, this is likely to happen next. And that's really all we want to know as traders. Right, I said we were going to look at the indices, and lo and behold, I've been looking at the NQ since the start of the physical open, and I'm really getting a bit sort of not frustrated. I thought, oh goodness, we're not going to have one of those choppy days at the time of this session, and lo and behold, it looks like we are having a nice move out and away from the congestion that we can see here on this. I've actually got the 2-minute chart up here at the moment, but what I want to do is just go back and have a look at the open, because those of you who came along to the Tuesday session on Forex, basically we looked at reversals as traders. That's what we do. We see a price move, as we can see now, but it obviously originated either from a congestion phase, as we've had here, or a reversal, as you can see down here, where there is just the price has been going in one direction. You've had a trend, if you like. It could be a primary trend, or in this case maybe a micro trend, and then you have a reversal for whatever reason. So that's what we're looking for. We want to capture these moves, and they appear for all sorts of there are all sorts of technical reasons why they appear on the chart, and volume price analysis, and certainly the tools that we've developed will help you identify and validate whether it's a genuine reversal or not, because that's what volume does. But it also helps to know why, what's going to be the trigger for that reversal. Clearly, there is a shift in the balance between buying and selling, and we haven't got the order book up at the moment. We haven't got time and sales, so we're not looking inside, if you like, behind the chart that we have at the moment. Maybe it's probably something we're going to do later on in the year, once we've finished with the TradeStation platform, because there is that facility to do so on that platform. So at the moment we have the chart, we have price action, we have volume, we have support and resistance, and we have these specialist tools. But reversals, and we just touched upon this really in the Forex session, and it applies to all markets, and we're going to develop this theme moving forward. And basically we can look at a chart and see a technical reversal, as I said, based on a pattern, based on the price action, based on a candle, based on the support and resistance level. Is price approaching a key level on a chart? Then you have the fundamental, is it going to be triggered by a piece of fundamental news or a fundamental event? Yesterday was a classic, because you had J Powell, if he was due to speak, his saying that there was no plan for negative interest rates. Anyway, the market took a complete swan dive and swooned. So that drove a reversal. Then you have sentiment. Sentiment is as you know, is the market in risk on or risk off? And what we have to do as traders, and that's not just independent and retail traders, but professional prop traders, bank traders, you have to go and scope out, well, what mood is the market in? This is investing.com. Some traders look at the bond market. You certainly must have to look at the VIX. Is that going up? Is that going down? So that will tell you, if there is a sudden reversal because there's a sudden shift in sentiment. Using proxy markets, as I said there, what we do, one market that you can have a look at is certainly the forex market, and in particular the Aussie Yen pair. Now, ironically, the Aussie Yen pair just before the open was actually going up, although markets, as I said, they've been swooning since yesterday, and certainly in Europe they've closed down today. But the Aussie Yen is going up, and sometimes you get this disconnect. So you can see something in a market that is a proxy for risk. And as I said, as the Aussie Yen was going higher, let's move it up let's take it up to, let's move up to say the 10-minute chart here. So where are we? Here we are. This is at the open. It's just before the open. It was going higher. Forget this candle oh, sorry, I'm looking at the wrong chart here. What am I doing? This is overnight in Asia. Sorry, I got my confused between 2 o'clock and 1400. Right, at 2 o'clock here, it came off this level, the Aussie Yen, which was quite interesting. This was just before the start of the open. It had been falling. It went down to this key level, which was RS4 on the camera, and it was starting to move higher. And I actually said to David, I said, it's really, I looked at the Aussie Yen, and it's actually it's creeping higher. It's not rushing higher, but it was going higher. This level was holding. Then we had all the usual volatility and volatility surge and what have you at the open, but the level has held and it's moving higher. So what you see in one market and on one chart, you can sometimes validate, and you can get a heads up that maybe what you're seeing, as I'm saying, on the indices, there's another market that could actually lead it, and that could be looking at a reversal. And that brings me to the trap reversals, and these happen at the new session, the session crossovers. They are classic in forex, but they also happen in the futures markets, because you have Globex. What happens in Globex, and then you have the physical open, this is when you get a sort of very, very classic trap moves. Now, I've got the 2-minute chart here, and I'll see if I can do it, because it was very, very well defined in, let me see, hold on a minute, if I can just close that down a little bit here. Here we have, that's right. This is where we have, this is on the 2-minute chart. In fact, it's not a very good chart. Here we are, this is much better. Right, this is the 15-minute chart. Brilliant. Okay, market is coming down, as we can see here. And if you think about what you've been reading in the financial press, the press generally, it's you see the headlines. It's terrible. Everything's awful. So as a trader, you're coming into the open. You've already got this kind of mindset that tells you, oh, you know what? Everything's really negative, so it's bound to carry. It's going to go lower. And having seen this on Globex, it has been going low. Then you have this up candles. You have this kind of 2-bar reversal here, which looks like it comes completely out of the blue. But if you actually look at the levels where it bounced off, you can see here it's quite a strong support level from a volume perspective. And it actually does go higher. This is the open, where you have the inrush of this huge amount of volume. And often traders are caught out because they've seen that, then they see that, and they think, oh, right, okay, well, I'll go long. Well, that ends up like it's not quite a shooting star, because it's not at the top of a rally, as it were. But there's obviously weakness. It goes up, it immediately is banged down at the volume point of control, and then it goes down even further. That confirms, if you like, everything that you may have heard previously, and the general mood of the market. That's it's very negative, following Powell, etc., etc. So what happens with traders? Because traders at the open are often told, well, hold on, let it settle down, let's see what happens, which is great, which is a great piece of advice. But it's a classic trap because it rushes up, comes down, and say, oh, great, time to go down. And it does go down. And I hope if you did go short in there, that's brilliant. But in going down, it posts this volatility candle. And what happens with volatility candles, there is momentum in that candle. What tends to happen is it immediately reverses to within in the spread of the candle. And unfortunately, in hindsight, you think, oh, great, I could have seen that and I would have jumped in here. But what tends to happen with traders, they wait and wait and wait and wait and wait and usually get in very, very late into that move. They get in and suddenly it reverses. And that is a classic trap. Now, what then happened, it did go up into the spread and it did actually go over 3 more candles. A lot of two-way price action then, but the most important level to consider, so we're talking about support and resistance as well for reversals, is roughly in the 88.50. Now, we use, as I said, we do use, as I said, this Camarilla level that we've, a Camarilla indicator that we've developed. If we go up to the 60-minute chart, what happens is one of the reasons why we had this basing at 88.50, other than the fact that it's a lovely round number, and one, anything with a ending in a 0 or a 5 is just, that's where the institutions tend to trade around. Anyway, this is a really key level, the S4, and you would expect it to stop. If it was going to carry on and it broke through the S4, then the chances are we would have had, it would have possibly gone into free fall. So you have to pull in all these, you have to be aware of all these factors which can cause a reversal. You've got trap reversals at the open, not just in Forex, but in at the physical open for the futures, certainly for the indices. Be aware of levels when the price falls to these key levels. Is it a key level perhaps in a slower time frame? And certainly on the 60-minute, it is on the slower time frame. And then what happens is once the market does go back to the 2-minute chart, once it did bounce off 88.50 here, there was I won't pretend that there wasn't a lot of choppiness going up and down, but the range of that choppiness was actually quite wide. So depending on what kind of time frame that you are trading on, you could be trading on tick charts, you could be trading on the 1 minute, you could be trading on the seconds chart like David does. So maybe there would have been opportunities in there. If you're trading on a slightly slower time frame, then you wait until that until all that sort of calms down. And in fact, we'd have had a trend higher. It's not been a smooth trend. There's been a lot of pullbacks. You've also got the volume point of control here. This is the point on the chart where there is no firm direction one way or another. You have to kind of wait for a further breakaway, if you like. And if you like that from here to there, which is a very, very nice trend. Not a lot of, there isn't volatility, but there were corrections and pullbacks. So that's where we're going to be focusing on, looking at these points on the chart where we could possibly see a reversal based on the candles, based on the volume coming in, based on the structure of the chart. And we had another, as I said, then we had a move further down, a perfectly tradable move down to the downside. It's really very much two-way trading. Then you get into these congestion areas, which can be very, very frustrating. But when it sits around the volume point of control, you have to be patient because it will break away eventually. Now, I haven't got the daily chart up here at the moment, but what I have got is the investing.com, and I know that the most that has gotten down to is about 92, which took it down to that 88.50. So I've got a mental picture of the kind of numbers that I'm looking at. So on the daily chart, if I'm seeing that reducing and I'm seeing the Aussie Yen going up as well, I know that it's, the market is happy to take on more risk. I also know There's no more news coming up. Everyone who's spoken has finished. So it's a trading market from now until the close, unless Donald says something, or there's some major development to do with the pandemic. So it's pretty much a trading market. Just going to bring up what the 60 minutes says here as well, because these values vary. On the faster time frames, they refresh every 24 hours. On the charts, an hour upwards, they only refresh once a week, and that's really, really important, because having weekly level values makes them stronger, and as we've seen here on the NQ, they really do hold. Let's see what happens on the 60 minutes. If it just brings, oh, I haven't got enough data, I do beg your pardon, it's pardon. Right, with Ninja, you have to put enough days in, otherwise nothing will happen. There we are. Where are we? And curiously enough, we're also almost at the S4 here on the Aussie Yen. And and also you have to remember is when markets are going higher, they always creep. They very rarely they do surge higher, but things always move more slowly going up than they do going down. If you've got any questions on anything we've got to say that we're saying, or that you don't understand, just drop a question into the chat box, and we will be more than happy to answer. So that's me. I'm going to carry on looking at the NQ. I think David, what have you got? You've got the Y. David's got the YM, different, and he can talk through that. And I think he's got gold up as well today.